Hi, this is Osama Rizvi coming to you from Primary Vision Network, and welcome to another episode of Monday Macro View. Today, I wanted to speak about because Russia and China, these two are very important nodes in the global economy as of today, and the whole narrative around not only the oil markets but also the global economy sort of spins around these two countries and others as well, but significantly because the developments within these countries will affect the direction of course, very significantly of the oil markets and also the global economy. So I thought we should take a look at how is the Russia's economy doing under sanctions, because they're quite conflicting reports. First of all, a little bit background. Russia is now the most sanctioned country in the world, with especially speaking about their oil sector, about 51% of the crude oil and 64% of their oil product exports being under sanctions. Moving forward, so what is the current state of the Russian economy? First of all, World Bank's initial forecasts were quite grim. They thought that by the end of 2022, Russia's GDP would be 11% lower, the investment would fall about 17%, and the inflation would have risen to 22%. However, by the end of 2022, these estimates were revised, and the fall in GDP was then estimated to be 4.5%, inflation about 14%. And IMF also gave an estimate about 3.4% hit to the Russian GDP. However, interestingly, recently, IMF now says that Russia GDP, the real Russian GDP, might grow a little bit. So that speaks a lot about how these estimates have gone wrong. One of the best example for this is IEA, when it predicted about 3 million barrels fall in Russian production. However, it was originally only 0.3 million barrels. So that goes on to show that the world is quite complex and it's very difficult to make estimates, believe me. For speaking about estimates, what is the state of the Russian revenue? By how much the Russian revenue have fallen? So current estimated earnings per day are about 640 million euros. That is reduction from 1,000 million euros in March to May 2022. About a total of 120 million euros per day of earnings have been reduced overall as a result of the EU measures. There has been a 12% reduction in Russian crude oil exports, 23% in selling prices. However, this is not as simple, because as we will see, there has been an increase in the dark fleet and opaque fleet and oil going through that. The next chart is also very interesting, shows a comparison of Russian GDP growth versus its benchmark oil prices. So back in 2015, when prices fell, Russia's GDP took Russian growth performed quite poorly. However, around $80 to $100 per barrel, the country's real GDP was estimated to grow about 4% a year. So the author, this was a very interesting article in Economic Observatory, the author says that assuming that there wouldn't be any sanctions and the oil prices would be at the same in the same range, 80 to 100. So there would have been a 4% growth in the Russian GDP. However, now as things hold, he estimates that there would be an about 7 to 9% hit to the Russian GDP in 2023. The next chart, shows a summary of the Russian trade, the balance, the import and exports before the invasion, after the start of the full invasion, and here it is important to analyze the dimension where we consider how is Russia's budget going to be shaped. So it is estimated that there would be a 50% increase in spending on security, very natural, obvious, and 9% reduction in spending on health, and a 2% reduction in spending on education, 24% reduction in spending on infrastructure, and a 19% fall in industrial spending. So moving on, as we move on to the second half of the year and the next year, we might see some serious economic implications for the Russian economy. But as of today, things aren't bad as they were thought they would be. Changes in demand and oil payments, this is very important. We all know that before it was Europe and the European economies. Today it is China, India, and Turkey. They have increase their portion of Russian oil products by a significant amount. And there are also even reports that EU is getting all the Russian oil even now, but it is only the difference. It is going through India. So India turns out to be a great beneficiary of this whole debacle. Moving forward, the price gap, which is very important. So here is where I would like to mention that what AXA recently reported, there has been an unprecedented increase in tankers in shadow fleet, the opaque fleet globally, and of all that increase, 80% of those tankers in shipping tank, those tankers, they're carrying Russian oil products or crude oil. So that goes on to, that means maybe there is an oil price gap, but a lot of oil, according to one estimate, 50% of the crude oil might be flowing out of Russia through unsanctionable shadow fleet. And that, shows up as strong revenue. Still strong, of course, there has been fall about 40% revenue a year-on-year basis, but still, the effect has not been as it was anticipated. According to one estimate, Indian buyers have been getting a steep discount, about 17 barrels less for the Baltic Sea crude shipments than Europeans. And then it sells it to Europe, and there's a whole, one can do a whole episode on that. But this chart especially, and this theme shows that there are lots of other moving variables. And once again, the purpose of this show was to just take a look at how is Russia faring under the sanctions and how it will do so. Because according to AXA, once again, the seaborne oil loadings from Russian western ports have hit multi-month high, and I don't see a lot of when we speak about oil markets, I do not see disruption to the oil supplies, but just a reorientation, or just a reorientation. So there's a difference between disruption and this. And moving forward, will this continue? Will this continue to be the same? Will there be a reduction, a steep fall in Russian oil production? These are the questions that are going to shape the future of the global economy. Finally, market sentiment tracker. You can see the left side being populated, the right side being fairly populated, but relatively less. We have US GDP slowed down, world trade merchandise slowed down. The global freight volumes fell the fastest in the previous 30 years. The European economy didn't grow as such because of inflation. On the other hand, Mexico and Brazil expected to post a little bit growth. European economy might show some resilience according to EY. But these are conflicting opinions. However, I believe the recessionary outlook keeps getting clearer. So that's all from my side today. We'll see you next week. Have a great weekend.